Good evening, ladies and gentlemen. This is Greg Michaelowski, and I'm with FXDD, and this is New York Evening Forex commentary. Today we had a quiet day in New York here, partly because most of Europe was gone for the day. We'll probably get back to normal circumstances over the next 24 hours or before then, actually, when London and Europe and everyone is back to work after the Easter Monday. But nevertheless, today we did have some economic news come out of the U.S. The ISM non-manufacturing composite index rose to 55.4 from 54.0 estimate. It actually rose from 53 last month, so this is a pretty good, healthy jump. Most of the components rose, including new orders, which had a nice, healthy advance. Also, pending home sales came out in the U.S. and they erased a sharp decline last month of 7.8%. They rose by 8.2%. This is much higher than the 0.0% unchanged reading they're expecting. So this too was good news. So we've had some string of good news since the employment number came out on Friday, which showed that the U.S. Added a number of 100 and I don't know 13, 20,000 jobs from the public sector, which was good news. And there's more jobs to come, at least on a temporary basis, as census workers get added over the next few months to the tune of maybe another 700, 800,000 jobs being added over that time period. So there's reason for perhaps that the dollar gets stronger, but we'll see how it all reacts. Maybe the market's already priced in a lot of those gains. So take a look at our charts. We'll start off with the euro versus U.S. dollar. Actually, take a look at the daily chart. Last week we did come close to this top trend line resistance level. That level came in at 136.14. The market on Friday, though, took us out of that ball game and started to move back to the downside. We did get through that, or we did hold this 135.35 level here today. The high came in at 38, and you can see off the daily chart a number of little lows and areas down around that line there. And I use the 35.35 just as a proxy. It's really like 35.42 or so. That the market has some resistance, but we definitely saw some sellers up there at the 38 level, and that started a little bit of the move back to the downside. Now on the downside, we do. Speaking of which, we also have support down to 134.37. So really, 100 pips is a difference between where we have resistance now and where we have support at the 37 level. The 37 level was a March 2nd low. This was 44. This is 51. So that area is a level of support for the euro versus U.S. dollar. Let's go to the hourly chart. And if we take a look at the hourly chart here, we do see that the market, I drew a trend line here. It's kind of a channel trend line, parallel trend lines of what we've seen over the last 8 or so trading days for the euro versus U.S. dollar. And the market initially fell below the 100-bar moving average, and also this trend line around the same level that caused the market to move down toward our lows for the day, and then we saw the bounce back up and move back above into the New York session, and then later on in the New York session we started to move back down. So most of the activity for the day, especially in London and New York, was spent below the 100-hour moving average. That 100-hour moving average currently comes in at 134.98. That'll continue to be a level of resistance on the top side, as well as trend line as we go into the evening session. That will come in at 135.16. So we'll be watching those levels for resistance on the top side. But right now the bias remains to the downside for that currency pair, whereas support 134.67 is a 38.2% retracement of this move. We dipped a little bit below that, but kept above that 37 level. Here we put in a line at 37. We also have to support against the 200-hour moving average, which comes in at 134.46. So I'd look for this area, right in this area, as our support level on the downside. I think if we get, we've already been below the 38.2% retracement on a couple of different times, but the bias does seem to the downside for the euro versus U.S. dollar. You can see this in the 5-minute chart as well. We're below both the 100 and the 200-bar moving average on the 5-minute chart. So we'll be watching that level as well. If we break above that level, maybe we see a little bit more short covering to the upside before we head down. Sterling versus U.S. dollar. This gapped over the weekend on the polls from the UK in regard to the Conservatives increasing their lead over the Labour Party in the upcoming elections, and tomorrow they're going to announce, I guess, when those elections will take place. So it's crunch time for the in the UK as far as their election cycle goes, and we'll see how that plays out The market has been taking a stance that if it's too close to call, that's bad news for the pound sterling. If there's a lead by any one of the parties, I would guess with the conservatives leading, that would be good for the pound sterling. We did see some better data, GDP a little bit last week. The ISM or some of those data came out a little bit better, so that's supported the pound sterling. And it's coming at the same time the U.S. is getting strong data as well, so it can go either way. Given all things equal, if you're focusing on the pound or you're focusing on the dollar at any one time. So taking a look at the charts. What we can see here is over the last 8 or so hours, the 152.97 level was a level of resistance here on the top side. Unfortunately, the bottom side had a low floor, maybe about the 152.70 level. So not much of a range there for the pound versus U.S. dollar there. So we'll be watching, however, this top side of the what was the old channel here. This channel goes all the way back to last week, and we had a nice upward channel, and then we broke through that on Friday. Today we gapped above it, and then moved back below and started to use it as a level of resistance. Now that level comes in at 153.29 on the top side. So if the market starts to move higher, look for a resistance up there at the 29 level. Even though we're making new highs, it seems like this old line is a level that the market's going to pay attention for the time being. On the downside, if we break the 152.21 level, you got to go down and test the 100-bar moving average. You also have to fill this gap that we have in here between the 152.05, 152.21 level for the sterling versus U.S. dollar. Moving on to the Japanese yen. We saw a correction today in the dollar yen. There's talk of exporters out of Japan selling the dollars, booking some of the future dollars that they'd have as a result of selling goods to the U.S., which we're obviously seeing some strong growth here in the United States of late, especially from the sales side. So this is helping the Japanese exporters, and they're happy to sell their dollars at the higher levels now as it approached 95 and got up to a high of around 94.80. And the market had come off from that point. We are below this 34 level. This 34 level was a floor. It also was a low level from Friday after the gap higher, and this hourly chart came down toward that 34 level. So it's becoming, it was a floor here, now it's a ceiling here. We'll have to get through that 34 level and then get back up through this 94.52 level. That's the old trend line up here in order to push the market higher. Off the daily chart, we have additional resistance at 95.08. That's a 61.8% retracement of the move down from the 2009 high to the low. So we'll be watching that as a level on the top side for resistance if the market is able to get through this 54 level, which is this old trend line here, and then we're going to have the highs, and then we're going to have 95.08 on the top side. On the downside, 93.76 is where the 38.2% retracement of this move higher comes in. Also, the 100-hour moving average comes at that level, currently at 93.77. Taking a look at the dollar versus Swiss, staying in between the goalposts, this market has to decide one way or the other, which does it want to break to the upside and have some momentum going to the upside, or does it break to the downside and have some momentum go to the downside. As you can see, we had a couple instances over the last few days where the market breach these two key moving averages. The green line is a 200 bar, the blue line is a 100 bar, and this is an hourly chart, so it's a 100-hour and a 200-hour moving average. But each of the time the market has gotten up, we've just come right back down, and it's trading in between the goalposts is how we call it. So the 61.8 is where the 200 is, and that's at 106.29. The 50% retracement comes in at 105.92, and this moving average comes in around the 100-hour comes in around the 105.84 level. So we'll be watching each of those levels to see if the market's going to break one way or the other for those currency pairs. Moving on to the Aussie versus U.S. dollar, they have their interest rate decision here tonight, and the expectations are that they're going to raise rates by a quarter. What they say after it is going to be more important, whether they raise rates, if they do it as they're expected. And on the top side, we do have this trend line off the daily chart that comes in at 92, it looks like 1920 area. This is connecting this high, this high, this high, and these highs. So 92, 1920 area is the top side. If we break through that, we're going to get through 92.51 and then 92.30, 93.29. Keep those levels in mind. If these levels hold and the market starts to come down, we could see a further correction to the downside. off the hourly chart. If you go to the hourly chart, we've been maintaining the price above the 100-hour moving average. That 100-hour moving average comes in at 91.85. At the 91.94 level is another key level for this currency pair. You can go back in time, look at that level off this hourly chart, and see why I have a horizontal line at 91.94. So 85 to 94 is our key support on the downside. Get through 92.20 on the upside, and we should see further momentum to the upside. On the downside, we also are looking for support at 91.49. That announcement comes again at 12:30 tonight. Be aware. Be prepared and watch these key levels. That's it for today. That's Greg Michalowski for FXDD.